It seems like we have developed a tradition where every year starts with a financial disaster. 2020 started with a massive stock market crash, 2021 with retail investors pushing hedge funds to lose billions of dollars and putting the entire financial system upside down. I'm just curious what 2022 is holding for us. The Fed is going to announce that it's going to launch its own cryptocurrency? I wouldn't be surprised. GameStop's stock price surged more than 1,700% instantly, driven by a group of amateur investors on Reddit who organized a revolt against hedge funds that bet against the company. The best part is that these hedge funds that seemed like no one can beat them at their game lost billions of dollars. A bunch of Reddit users destroyed multi-billion-dollar hedge funds that spent millions on the latest softwares, best accountants, and analysts to predict the market. They even caught the eye of the White House in the process. Melvin Capital, one of the hedge funds that shorted GameStop, lost 53%. It started the year with $12.5 billion and ended January with just $8 billion. It's estimated that short sellers lost nearly $13 billion on GameStop alone so far this year. I guess these hedge funds will think twice before shorting another stock. However, most retail investors who purchased the stock at $300 or $400 or above ended up losing most of their money since platforms like Robinhood restricted trading. To understand what really happened with GameStop, we have to understand why hedge funds shorted GameStop in the first place. How is it possible to short more stocks than the number of stocks that exist? Should you trust WallStreetBets? And how to avoid the biggest financial mistake that most investors make? We will answer all of these questions and many more. But before we do that, here is a little disclaimer. This is not financial advice, and everything that's said in this video is for educational purposes. In order to make the best financial decision that suits your own needs, you must conduct your own research and seek the advice of a licensed financial advisor. And now, let's give this video a thumbs up for the YouTube algorithm, and let's get right into it. You probably heard about hedge funds, but you don't know for sure what they do because they're not allowed to market themselves since they are not regulated. That's why very few people know how hedge funds work. Hedge funds are made by the rich for the rich to make rich people richer and avoid taxes. That's all that you need to know. If you have never invested through a hedge fund before, that's alright because you need a net worth of at least a few $100 million. Unlike ETFs, they take a percentage of the profit besides a percentage of the total assets you invest in. That's why they try to maximize profits for their clients. The most common investing strategy you probably heard is buy low and sell high. That's how you and I invest, but the ultra-rich like hedge funds invest by reversing the strategy. They buy high and sell low. That doesn't make sense at first glance, but it's simple. Let's say you expect a certain stock to decline, like Intel, because you know that Apple, who is their biggest client, will announce that next week that they will no longer buy Intel chips and make their chips in-house. So, you pick up your phone and call your broker. You borrow from him a single Intel stock that cost $100 and instantly sell it in the open market for $100. Congrats! Now you have $100 in your pocket. But you still owe your broker one Intel stock. Let's say you are right, and next week Intel's stock price drops to $70. You use that $100 to buy one Intel stock for $70 since the price dropped and return it to your broker and pocket the difference. Congrats, you have made $30 out of a fall of a stock. It sounds simple in theory, but it's extremely difficult and risky in practice. What happens if you're wrong? What if the price doubles overnight? You still have to return that single Intel stock to your broker. Now, you have to buy that stock back for $200 to return it to your broker. When you buy a stock and try to sell it when it rises, the maximum that you can lose is the amount you invested in. But in the case of shorting, if the price keeps rising, your losses keeps rising. Theoretically, you can make unlimited losses, since theoretically, the stock price can rise indefinitely. So, when hedge funds realized that GameStop is struggling, they decided to play around with its stock and bet against it, and shorted 114 of its stocks. What? Wait a second, how can you short more stocks than the number of stocks that exists? It's complicated, but here is the simplified version. Let's say Elon owns one GameStop stock. His broker lends his one share to a short seller, Jeff. Jeff borrows that stock and sells it in the open market to Warren. Warren doesn't know that Jeff actually borrowed that stock. So, when Warren's broker lends his share to another short seller, Bill, who then goes and sells that share to another investor, the exact same share now has been shorted twice. This scenario should not have happened, but it happens. So, the Reddit user who was investing in GameStop since the fall of 2020 realized that all of these hedge funds shorted over 100% of GameStop shares, which means if everyone starts buying GameStop, the stock will keep rising, and hedge funds will have to buy these shares no matter how expensive they get to exit their position. But that will drive the price higher, which will attract more investors, which will again drive the price higher, to the point where these hedge funds will either go bankrupt or at least buy back these shares at an unbelievably high price. So, GameStop's stock price surged more than 1700% instantly. Theoretically, it made sense to buy GameStop because short sellers had to pay interest on the borrowed stocks. If everyone held their position and didn't sell, hedge funds would have kept proposing higher and higher price. GameStop could have easily crossed $1,000, but something went wrong. Platforms such as Robinhood and others restricted retail investors from buying more GameStop shares. That is insane. Of course, they explained their actions by saying that they were protecting their clients, but I don't personally buy that. That could be the reason partly, but I think there is a lot more to this than we know. Who knows, maybe one day we'll find out. Here is what I don't like about these kind of investments. First of all, it's not investing, it is trading. And it's not based on any data or logic. The people who invested in GameStop and similar companies are not investing because they did not do fundamental analysis and expect the business to grow. It was pure pump and dump. The problem with that is that no matter how high the stock price will rise, it will crash and fall back to where it started because the company didn't change or grow. At some point when the price reaches a certain point, early buyers will sell, which will drive the price down, which will force other investors to panic and sell, which will further drive the price down, which will force more investors to panic and sell, and so on until most people who purchase the stock after the hype will lose at least some of their money, if not all. You could be lucky, you could be one of the early buyers, but chances that you will lose money, especially if you invested once it was already all over the news, are way higher. When something like that happens, when everyone is making money, when it's all over the news, it is really difficult to control yourself. The feeling of missing out will push you to invest even if it's too late. I've had that feeling multiple times, but I try my best to control myself because if I feel like I'm missing out, chances that I have missed out already are 90%. So even if it's a great opportunity, I would rather miss it than lose the money I have earned with my blood and sweat. I'm not saying you shouldn't take risk or invest. Investing is great, I do invest myself, this channel is about investing. But when investing is based on facts and data, chances you will make more money way higher. And most importantly, you can sleep peacefully at night. If you have enjoyed this video, you will most definitely enjoy this custom playlist that I have created specifically for you that has our most popular videos on business, investing, and the stock market that could potentially change your life. And now give this video the thumbs up that it deserves and make sure to subscribe if you haven't done that yet. Thanks for watching and until next time.